Picture this. You found the deal everyone told you to walk away from. A solid 3-bedroom rental, good neighborhood. You can feel it's right. So you walk into your bank confident, and they say no. Not because the deal is bad, because of your tax returns. You're self-employed. You write off what you legally can, like any smart investor. But on paper, you look broke, so the bank never even looks at the property. And here's the part that nearly stops you. You don't fully understand your own numbers. Is it a good deal? You think so, but you're guessing. And you can't win a deal you don't understand. So before you give up, you do one thing differently. You run your deal through a free calculator, DealCalc Pro. And for the first time, you see your deal clearly. Because the whole thing comes down to one number every investor lender cares about, your DSCR. DSCR, debt service coverage ratio. It answers one simple question. Does the rent cover the payment? Your property is listed at $199,900. You put 25% down, leaving a loan of $149,925. At a 7.25% rate, your full monthly payment, taxes and insurance included, comes to exactly $1,302.75. Now the income. The calculator pulls the HUD 3-bedroom fair market rent for your area. $1,750 a month. Real market data, not a guess. You divide the rent, $1,750, by your payment, $1,302.75, and there it is, a DSCR of 1.34. Here's what that means for you. Below 1.0, the income doesn't cover the debt. 1.20 to 1.25 is the range most lenders want. You, at 1.34, aren't just qualified. You're strong, and that strength shows up in your pocket. $447.25 in cash flow every month. $5,367 a year landing in your account. But here's what separates you from every investor who gives up. You just learned you can change that number. A deal isn't simply good or bad. You have levers you can pull. Here are the 4 that make a deal work. Lever 1, your down payment. The more you put down, the smaller your loan, the lower your payment, and the higher your DSCR climbs. You put 25% down, and it pushed you into strong territory. Lever 2, the rent. Higher rent directly lifts your ratio, and your $1,750 is backed by real HUD data, so no lender can argue it. Lever 3, your interest rate. A lower rate means a lower payment and a stronger ratio. And lever 4 is the one most investors get wrong, your credit score. Credit doesn't decide if you qualify, the rent does that, but your credit sets your ceiling. It controls how much you can borrow, and it drives your rate. Better credit, better leverage, better terms. You put these levers together, and you engineer a deal that works. You're not hoping anymore. You download your report and bring it to an experienced investor lender, Imperial Capital Funding. They don't ask for your tax returns, they read the deal, and they fund it. You own that property today, the one everyone told you to walk away from. It pays you $5,367 a year. You found the deal, you did the work. The calculator gave you clarity, the lender gave you the close. But the win, that's yours. Your move starts now. Run your deal free at DealCalcPro.com, then bring it to us at impcapfund.com.